Welcome to Trading Day. I'm Roger Peterson. Thank you very much for joining us. Let's get to some of the stories we're following for you in the BNN Bloomberg newsroom. A new report citing several trade irritants between Canada and the U.S. includes provincial rules around alcohol and the federal government's Buy Canadian policy. The annual document, prepared by the Office of the United States Trade Representative, also mentions delays with aircraft validation in Canada and high tariffs on U.S. dairy products. The U.S., Canada, and Mexico will choose whether or not to renew CUSMA or not starting in July. Shares of GoEasy are taking a hit after logging a deeper than expected loss in the fourth quarter. The results come after the lender recently surprised investors with a surge of bad debts in its vehicle financing business. The Ontario-based firm says it expects loan write-offs to remain elevated for a while before improving later in the year. GoEasy says its long-term opportunity remains unchanged, but did not provide a forecast. Shares of Groupe Dynamite are getting a boost today. The retailer reported fourth quarter profit that more than doubled compared with a year earlier as revenue rose 45%. The results were driven by increased in-store demand and strong online sales. Dynamite also plans to expand its Garage brand into the UK this year. The retailer posted a strong outlook for revenue growth for the full year, but cautioned about multiple risks, including tariffs and a possible decrease in customers. Taking a look at the markets now, and that rally from the news yesterday continues and really showing no signs of abating. The TSX up by about 0.92%. Pretty much every sector is in the green except for consumer staples and energy materials leading the way up nearly 4%. South of the border, it is a similar situation. A lot of happy people down there right now on that news, and we're looking at the S&P 500 up by 1.15, the Dow by 0.9, and the NASDAQ by 1.7. Okay, U.S. retail sales in February saw the strongest monthly gain since July of last year. My next guest believes the gains depict a resilient consumer sector. Let's hear more now from Jack Ablin, founding partner and chief investment strategist at Crescent Capital. Jack, thanks very much for joining us today.
Thank you, Roger.
What did you like about the numbers that we saw today?
Well, much stronger than expected. We also saw that out of the 13 major groups, 10 groups showed advance. And the biggest gains were in department stores and autos, which certainly a pretty discretionary part of the retail palette, so to speak. And so all in all, I think it really painted a picture of a pretty resilient customer, even in the face of a weakening jobs market.
And what does that tell you with retail and auto doing well? Does that give a good indicator maybe the economy's on the upswing?
Yeah, I think it means that we're in better shape than we thought. I think it also means that a lot of the tax refunds that a lot of taxpayers are getting in Q1 are starting to perhaps be spent. And I think that's fuel for at least some near-term growth.
And on the other side, you said there were a couple of sectors that struggled. What were, I think it was a couple you said?
Yeah, so really furniture, related to probably a stalemated housing market, groceries. That's not so bad, groceries, because of the non-discretionary nature. So those were really the two areas that, showed sign of some weakness. Furniture, I think we can expect, with a kind of a subdued housing market. We've got mortgage rates now back above 6.5%. That's up from just under 6% before the hostilities broke out.
And also, I believe for furniture, was weather a factor too on this one?
It could have been. I have to confess, I'm down here in South Florida, so weather's not much of a factor down here. But you're right. There was, I think, 3 feet of snow in a couple of big cities, and not really conducive to going out and buying a couch.
Do you even know what snow looks like? Okay, we'll move.
Yeah.
We'll move on.
I've seen it. Yeah, I've seen it on TV.
and ice in your drink, right? Okay, let's get back to the show here. Moving forward, I mean, we've got gas, we've got fuel prices up. What kind of a factor will that play when we next see these numbers? Will they be part of it yet?
Yeah, so these were February numbers. We will see. Obviously, March will now, take into account the massive spike, 40% spike in energy prices, $4 per gallon average pump price. So I think we will start to see a diversification away from some of the discretionary spending. There was an interesting article earlier this week talking about Las Vegas. If you think about probably the ultimate discretionary spend is Vegas, and there, as far as the people that live there and work there, they believe that Las Vegas is in recession right now.
Really? I mean, I know a lot of people have complained about Vegas for a while. They said it's gotten so expensive that they don't want to go anymore.
Room rates are coming down as vacancies have gone up. And a lot of last minute, it's probably a lot of last minute travel that people are deciding, with the higher costs and everything else, we're going to kind of sit this one out.
All right. And speaking of gambling, one of the things we want to talk about, high yield bonds, you're recommending against it.
I am. I'm first of all, the credit spreads, the yield premium that the bond market's offering relative to high quality bonds isn't attractive enough to, as far as I'm concerned, compensate lenders to invest in these low quality companies. The default rate is certainly could start to spike. Another, from a diversification standpoint, keep in mind that high yield bonds are pretty highly correlated to equities. I think equities are a better play here, given where yield spreads are. I think the liquidity, is a little bit lower in high yield, and there's no liquidity premium. There's no availability of additional yield for that illiquidity. Is
there anywhere in bonds you'd be interested in?
Yeah, our favorite space is in the private markets, but our favorite space is tax-aware private credit. So this is really an area where we're buying leasing portfolios. Given the big, beautiful bill, we're able to now depreciate or accelerate depreciation, get a lot of first-year write-offs, and that helps offset a lot of the income that comes in. So that's an area that we really like, equipment leasing.
And what's it like if you have to get your money out of those?
There's absolutely a liquidity premium on that. These are closed-end funds. Generally, these leases last from 3 to 5 years. And so, that's the time horizon. Now, keep in mind, they are going to kick off an 8% annualized quarterly payment. You can take that as current income, but your principal is going to sit tight for 3 to 5 years.
All right, we've got to wrap it up there, Jack, but thanks very much for joining us.
Thank you.
Jack Ablin is founding partner and chief investment strategist at Crescent Capital. Coming up, we'll break down Groupe Dynamite's fourth quarter earnings. They were dynamite after a strong fourth quarter. More on that after the break. Groupe Dynamite tracked a higher profit in its fourth quarter, driven by increased in-store demand and strong online sales. For more on their results and what they signal for the year ahead, I'm joined by Martin Landry, Managing Director in Consumer Products and Merchandising at Stifel. Martin, thanks very much for joining us.
Thanks for having me.
Pretty much, can you call that almost a perfect paper there? Those numbers, like both online and in-store, jumped.
Yeah, the results were stellar, no doubt about it. You look at same-store sales growth of 30.4%. This is basically unheard of, right, in the apparel sector. EPS growth of 115% due to margin expansion. So when you have strong same-store sales growth combined with gross margin expansion, it's really healthy. great to see. Means they didn't go and buy volume. It was lucrative sales. So really impressive results, no doubt about it.
What are they doing right?
Well, the brand is really hot. Actually, Groupe Dynamite has got two brands, Garage, which caters to a younger demographic, and Dynamite, which is an older demographic. Dynamite is Canadian mostly. Garage is Canada and US and growing really rapidly in the US. And that's the main growth engine of the company. And they're gaining a lot of share. They're in that athleisure sweat fleece product that is really appealing, a little bit edgy and a little bit sexy. And it's getting a lot of traction.
And I saw this quote from Andrew Lutfi, the CEO. He said, as long as interest rates are slightly higher where they are today and inflation seems to be reasonably real and there's angst in this world, we actually do better. That's actually a good tailwind for us. I don't know if I've heard someone talk about negatives as positives.
Well, I mean, there's a couple of things here to unpack. Groupe Dynamite is relocating its stores in higher-end malls and affluent malls, and sometimes they are a lower price point than some of their neighbors within the mall. So they benefit from trade down. I think Andrew was also talking about the fact that it's a non-expensive indulging proposition, right, to buy a top at $30 or $40 for a young woman. So what he was saying is that as long as interest rates are high, the big ticket items may be slowing down, and people will indulge and splurge into instant gratification and lower price point items.
You're staying with Lutfi for a second. He has 10 to 1 voting right shares. How much of a factor is that when you're pricing everything in with it?
Well, there's a lot of companies on the Toronto Stock Exchange that have multiple voting shares. I mean, for us, Andrew is a very successful entrepreneur. He's has multiple companies that have done extremely well. So right now, it's kind of irrelevant. I think there's a scarcity of growth names in the consumer space in Canada. You've got one that's having a ton of success in the US and internationally as well. As you may heard, they're expanding in the UK. So the multiple voting share for now are not an impact on valuation.
And let's talk about that expansion and maybe other potential headwinds / tailwinds, depending on how things go. But first, the expansion into the UK, how is that looking? How's that shaping up?
Yeah, I mean, it looks like it was a huge success. They've opened up 2 new stores in the UK, their first entry in that country. They opened the stores a couple of weeks ago, and lineups at night before the store openings in the morning. The company said that those 2 stores were the best openings in the company's history. So the brand has crossed the ocean. They did a really good job to promote and amp up the opening, and it was a hell of a success.
All right, and then when it comes to the other side, buying things that they need, tariffs, what kind of a factor could that possibly be now?
Well, tariffs are going to be a tailwind for the company in H1. This is part of the gross margin expansion of 200 basis points that the company is guiding. Remember, last year tariffs were elevated on Liberation Day, so the company is comping lower tariffs right now, and also because they turned their inventory really rapidly, they're able to price according to the costs that they're dealing with at the moment. So probably have a better pricing adjustment than some, and less of a lag between price increase and cost increases.
I wanted to ask you about that turnover metric. It's 9.85, up from 8.54. How good is that? How does that compare to other companies?
It's extremely impressive. It's best in class. It's the secret sauce of Groupe Dynamite. It's their inventory turnover. And why is that a secret sauce? Because the faster you turn your inventory, the less clearance and the less stale inventory you have. So it fuels into their strong gross margin. If you look at their gross margin and EBITDA margin, they're best in class. So by turning their inventory, we're talking about like 37 days. Every 37 days, they're turning their inventory. They have very, very limited discounts and strong gross profits.
It sounds like they're almost running like a just-in-time, like a factory somewhere. Now, any potential headwinds, competition? Fashion is fashion; it can be fickle.
No doubt, and that is one of the main questions. And I think a lot of investors are trying to ask, and even us, we're trying to assess. How long does this brand remains hot? Very, very difficult to say. But right now, they have a long growth runway. We think they're targeting 350 stores. That's an increase of 15% versus where they are right now. They've just started their international expansion. The company alluded to potentially, expanding into other markets at some point, right? There's not only the UK, but other markets in Europe. So it feels right now that there's a long growth runway for Groupe Dynamite. But you're right. Fashion comes and goes. It's very cyclical and difficult to handicap.
Okay, we'll have to wrap it up there. But Martin, thank you very much for joining us.
Pleasure.
Martin Landry is the managing director at Stifel. Unifor is calling on Ottawa to make valuable changes as Canada hits 1 year since Trump's tariffs were imposed. That's all after the break. Hard to believe, but a year ago, U.S. President Donald Trump triggered tariffs on Canadian products. Our next guest says the past 12 months have been especially difficult for workers in trades-exposed sectors, with many left in limbo about what comes next. Unifor is now urging Ottawa to adopt a sell here, build here strategy. Joining us now is Unifor National President Lana Payne. And Lana, thank you very much for joining us today.
Thanks for having me, Roger. Appreciate it.
Let's talk a little bit about what the situation is from your side, from the union side. What have you seen over the last year?
It has been a brutal year for working people in, of course, the auto sector, the forestry sector, many sectors that have been hit by these sectoral tariffs during what has been a very difficult year during this trade war. The numbers have been clear. We saw a staggering loss in motor vehicle manufacturing in the last year of about 27% down, 8% down in auto parts. So that when you have those kinds of reductions, that means workers are impacted and production is impacted. So we've got a lot of work to do here to stabilize the sector for today and for the future.
Now, obviously, the auto industry is probably the one that's been most talked about. Are there other sectors that have taken similar hits?
Yeah, for sure. If you look at the forestry sector from one coast to the other coast, they were being punished with these harsh softwood lumber duties. And on top of that, now we have seen tariffs on wood products. So it has been a very difficult year of mills being idled, shifts being cut, plants being curtailed all across that sector and across the auto sector too. And of course, when you have a situation like that happening, it really also impacts investment, which is key and critical to the future of these workplaces.
Do you know how much investment has been lost because of what's going on? Any numbers to it?
Well, if you look at Brampton as an example, an auto plant that can employ 3,000 workers plus thousands more in the supply chain, the investment there to get a new product, would be substantial, hundreds of millions of dollars to get that going again, if not more. And this is the situation we are in right now. That's why we really need a strong auto policy, and we have the start of one in Canada at this moment. But there are elements of that policy that need to be worked out so that we are actually supporting companies that build in Canada, contribute to the manufacturing footprint in Canada, and create good union jobs in Canada. And those companies that do that need to be treated in a preferential way under this policy compared to what I call the free riders, which is a lot of global auto companies who sell into our market. This problem was made a little bit worse by the China deal. And they do so without having to build in Canada, without having to have a supply chain in Canada. The world has changed. We can no longer operate like that. We've got to do everything in our power to protect the jobs that we have here in this country. And that means looking at policies such as if you're going to sell in our market, you have to build in our market.
How realistic is that, especially for the auto industry? I mean, from the Americans, I were so intertwined with them, and from other countries, how realistic is it that we could bring them to convince them to come build here?
Well, if they're not going to build. Yeah, if they're not going to build here, then they shouldn't get preferential access to putting cars into our market. And really, in some ways, importers get treated better than those who are spending billions and billions of dollars investing in auto plants and in the supply chain. So there's a way to incentivize, use the carrot stick approach, if you will. If you're going to build here, we're going to treat you in one way. If you're not, then there are penalties attached to that. And as I say, no more free rides. We really have to look at how we have domestic policy and strong Canadian policy to support Canadian jobs.
What would be a carrot and a stick to you, say, in the auto industry with the Chinese car companies that are coming in?
I mean, obviously, you can look at a situation where they have to pay much higher tariffs in order to have access to the market. That needs to be considered. We have companies and countries who import into Canada. They have and do not contribute 1 cent to a manufacturing footprint here. Those days need to be over. If we're going to keep an advanced manufacturing sector in Canada, the world is changing. We have to change with it. And that means doing everything that we can to protect those jobs and the industrial economy of Canada in this moment.
Is this the time to be bringing something like this out? I mean, we're on the 1-year anniversary of the tariffs. We just saw that report from the Office of the United States Trade Representative saying the Shop Canadian or Buy Canadian is an irritant to the trade negotiations, and we have the negotiations coming up. Could this not be detrimental to the CUSMA talks?
I would suggest that what we did with opening the market to China is more of an irritant than Buy Canadian, and the Americans are fine ones to talk. They have a Buy American policy. It's very very ingrained in their culture. The reality is that there's a deal here to be had. We build cars together. We can continue to build vehicles together. The U.S. needs many of the things that we have in Canada, and we've got to keep pushing forward in that regard. And the economic conditions are such right now where if you look at what's happening in the U.S., they are losing manufacturing jobs hand over fist as a result of these tariffs. The very opposite of what Donald Trump said would happen with the tariffs, it is occurring. And I would say to you, Roger, the only thing being liberated right now are working people from good jobs. That is what is happening as a result of these tariffs on both sides of the border. 25% of the job losses in manufacturing in the United States have been in the auto sector. We in Canada have lost a significant part of the manufacturing sector too. And so we have to make sure we're doing everything possible, either through trade, but also through policy in Canada to be protecting our industrial economy right now in the moment when it needs it the most.
Okay, we have to wrap it up there, Lana, but thank you as always for joining us.
Thank you very much.
Unifor National President Lana Payne. Still ahead, the Artemis 2 mission is set to blast off today and exit low Earth orbit, heading toward the moon. First time since 1972. We'll talk to Canadian Space Agency astronaut David St. Jacques about the impact. That's after the break. 4 astronauts, including Canadian Jeremy Hansen, are poised to lift off in about 5 hours from now on a 10-day journey that will slingshot them around the moon, marking humanity's return to the lunar vicinity for the first time in half a century. Joining us now to discuss the Artemis 2 mission and the impact on Canada is Canadian Space Agency astronaut David Saint-Jacques. David, thank you very much for joining us today.
Hello, Roger. How are you?
I'm good. I imagine you're great.
I am kind of giddy.
What, from the personal side, what is the most exciting thing about today that we're about to watch?
My good friend Jeremy is going to the moon. Well, I mean, it's just, I say it and it sounds unbelievable, but this is happening today. We've been planning this mission for so long. Jeremy's been preparing for this mission. Jenny Gibbon, who's working backstage as his backup, has been working for so long. The whole agency has been behind, the whole nation has been behind this for so long. Can't believe it's game day. It's finally game day today. So right now, as we were talking, they're putting their spacesuit on, and soon, if these go, they're going to go to the rocket, be strapped in. So this could well happen today.
What does it tell you about having a Canadian being on this trip, this journey, the first time around the moon in 50 years?
You know, as a citizen, as a father, it makes me really proud. I am proud that this is the country that we have, a country that's part of this very, very short list of nations that are pushing the envelope in space exploration. Jeremy will be the first non-American to go to the moon. It says something. It's a testament to him, obviously, and his skills, but to our nation, to our space program, to everybody who's been working for decades, you know, making Canada the champion in space robotics, for example, with a series of Canadarm robots that we've put on orbit. So I think this is really a day of kind of recognition of everything we've done so far, and there's so much more we can do. It's a moment of pride. And I also think that it's in these days of kind of troubled times geopolitically, it's also a moment for humanity to look in the same direction for a short moment as we put four of us, on this dangerous mission to go check out the far side of the moon.
I think, and that's what you have to remember, that it is a dangerous mission still. Canadian technology will be helping. What is Canada? Where are Canada's strengths? You mentioned the Canadarm number 3 they're working on right now. What are Canadian strengths when it comes to space?
So our space sector is really strong. I mean, at the core of it, our academia, our universities are strong, our industry is strong, and our workforce is strong. And so in space, we're good at making satellites, we're good at making robots. We have a great aviation industry. This is all kind of meshed in. Right now, we're putting together a program to provide rovers to the Artemis program. So we'll be involved in surface logistics, a bit like we've been doing logistics with Canadarms, really, if you want. It's like a ground version of Canadarm. So we are, we're just a respected member of the club. And I'll share something personal with you. When you become an astronaut and you join the astronaut office, it's very intimidating the first time you set foot at the Johnson Space Center. And it was so heartwarming to see that because of this flag I'm wearing, people trusted me. People thought, yeah, Canadian, that's fine. They deliver. These guys deliver. So we're really standing on the shoulders of giants. And today, Jeremy is at the very, very top of that pyramid of giants that we have built over decades.
I somehow think calling it office is an understatement, really, for what you guys for what you people accomplish going up in space like that. So how will this benefit, do you think, the Canadian space industry?
So this is a confirmation that we are at the table, with the people, the nations at the forefront of space exploration. The Artemis program, so this is Artemis 2. It's called 2 because it's the number 2 in a long series of missions of increasing complexity that will lead to a permanent settlement on the moon. A bit like we've made a permanent settlement in orbit with the International Space Station. We're doing the same now on the moon with a view of one day venturing to Mars, but we're doing this in a step-by-step approach. Artemis 2 is a test flight. It's a test flight of this particular rocket. This is a new rocket system, an entire new capsule. There's not often that we test new spacecraft. This is the first time we send this particular spacecraft with people inside. You might remember 3 years ago, we had Artemis 1, which was uncrewed with just mannequins inside and sensors. Now we're sending people. They're going to test all the life support systems, the emergency procedures, manual flying. We're going to test these orbital mechanics, make sure we understand better the environment around the moon, radiation for humans, the psychological effects. It really is a test flight that is required to be comfortable with the risk of the next mission that's a bit more complex, and then the next one, and the next one, and the next one.
Okay, and I'm going to nerd out for a bit. We were talking the business side. Now I'm going to nerd out. What's it going to be like? How big is the capsule they'll be going up in? Will they be able to move around? Like when John Glenn went up and that crew, they couldn't move really. Will these guys would they have any space, the four of them?
Thank you for the nerdy questions. I love them. Join the club.
Oh, yeah.
Yeah, so it's kind of the size of, a small van, let's say. So when they launch, they're gonna be strapped in real tight, not going anywhere. Once they reach orbit and they can unbuckle, they'll be able to flip around. They're probably going to have to constantly say, sorry, like Canadian, to fly past each other. But there's plenty of space to move around. There's even some exercise equipment. There's a little galley area. There's a bathroom area. So they're like in a very small RV, if you want, like a road trip in a van that you could not get out of.
So that the 50 years advancement, they've gone from the little the mini car, the Corolla or something, up into a minivan now. So they're moving ahead. And when they get up there, will they be doing any experiments when they're up there, like external experiments? Obviously, they're going to be testing equipment, but will they be testing anything in space itself?
Yes. So to summarize what's going to happen, they're going to leave Earth, and initially they're going to be on a very low Earth orbit, just in case they need to come back in a hurry. Check out the basics of the system. Then they're going to push themselves to a higher orbit, a big elliptical orbit around the Earth. They're going to be there for about a day, testing manual flying, testing all the life support equipment. And once they're happy, everybody's happy, kind of hit a point of no return. It's called a trans-lunar injection burn, where they're going to push the capsule to the moon on a long figure-8 flight that's going to bring them back home 8 days later, having, if you want, fallen back from the moon. So while they are in transit to the moon, they're gonna release some little satellite probes to measure the radiation environment far away from the Earth's magnetic field, because it's a completely different environment for humans there. They're also going to have on board little kind of biological samples to measure their effects of radiation. So that's one big theme of the research, is radiation impacts on humans when you're far from the protection of the magnetic field. They're also going to be doing photography of the far side of the moon. The way the mission has been timed, they're going to have the far side of the moon is going to be in broad daylight. So they're going to be able to take great photography of the far side that nobody's seen before, and maybe start the scouting process for landing sites for future Artemis missions. And
how are they going to feel? What was it like when you went up? We're going a little long here. They let me go a little long because I stopped listening to everybody telling me to wrap up. What do you think they'll be feeling when they go up there? And what was it like when you went up, when you first felt leaving, the bonds of Earth?
So I think they're like I was at this point. But now they're in the zone. They're in their head. They're in their bubble. They know they're ready. They're thinking of their family, their loved ones, everybody who's been backing them. They've done their homework. They know their system inside out. This is game day. They're trying to be as lucid and alert as they can. So they're zen. They're in the zone right now. And through launch, they're going to be concentrated on their task, which is to monitor all the systems. We're all going to have a sigh of relief, and they will also, when the main engines cut off. MECO happens about 8 minutes after launch, and they're safely parked in an orbit around the Earth. That's the first poof moment. Obviously, the real poof moment is when they come back 10 days later, the parachutes open and they splash down in the Pacific Ocean. But there's going to be all these moments there of one more box tick, one more mission objective accomplished. They're really in a operational mindset. Obviously, they'll take time to look out the window, and kind of try to absorb as much of this in, their mind is going to be racing, trying to make sense of what they see, the Earth getting smaller, the moon getting bigger, the far side of the moon. They're just going to try to hit record and remember all of this to kind of process it later on. So it's like anybody who goes on a trip in a distant land where everything is new.
It's a little more than that. We have to go now, David, but thank you very much for joining us. I want to go to space with them. I'm jealous.
Thank you, Roger. Godspeed. Go, Artemis, go.
Absolutely. Canadian Space Agency astronaut David St. Jacques. You're watching Trading Day on BNN Bloomberg. We'll be back after this. We've been talking space today because Artemis 2 is heading up to the moon in a few hours. Jeremy Hansen, the Canadian astronaut, will be part of the crew, but there'll also be some Canadian technology aboard. MDA Space is involved in this historic moment, and we had a chance to speak to the CEO, Mike Greenley, about becoming a part of history.
It's a historic day. It's the first time that humans have been back towards the moon in over 50 years. The first time that a Canadian has ever gone to the other side of the moon. And this group of 4 astronauts will be it'll be the furthest that humans have ever traveled from the Earth. And so that's the historical aspects of the moment. And it's the opening of a new phase, of opening up a new economy. So for the Canadian space industry, which we're a key member of, the opening up of the return to the moon, the establishment of living and working on the moon, which Artemis program is constructed to achieve over the next several years. This is the first very important step in doing all of that, with this group going out around the moon today. And then the next group in 2028, there'll be 2 landings on the moon with humans starting to set up living and working there.
All right, I want to bring Nate into the conversation. Nate.
Mike, this is a great day, exciting day for you and everyone involved. What for Artemis in general? Obviously, one of the big goals is to return to the moon. But what are some of the other main goals of Artemis over the coming years?
For sure, well, the primary singular sentence is to live and to work on the moon, for sure. That causes us to sort out as a space community all sorts of different issues, determining how to have the reusable rocket systems that can go back and forth to the lunar surface, to be able to put communication systems on the moon, which MDA Space will be a part of, or is currently a part of, to be able to put rovers on the moon, to be able to drive around once you're there and move logistics and cargo, to be able to build habitats, to be able to look at the ability to have sustainable food sources on another planet, and then to start to explore that planet in terms of looking at what types of resources can be available to be able to do things like create fuel, to be able to then have bases from the moon, to be able to move on to further out into the planetary system. So a whole series of technology achievements will be part of the Artemis missions. In addition to a lot of human science achievements, we've studied the performance of humans in space for the last 25 years on the International Space Station. Now, obviously, putting all of that to work to be able to continue to study and advance having humans live and work on another planet with different characteristics as we now figure out how to live and work on the moon.
And for MDA itself, Canadarm3 is a big thing for you. NASA may not be using that now. Where do you see yourself fitting in with Artemis and with the space programs in general?
Yeah, for the Canadarm3 program is Canada's program to contribute space robotics to the Artemis program. Canada, of course, through the Canadarm history, is the world leader in space robotics with the most experience of any nation in this regard. And so, right now we're in review to look at, can we take the robotics that has been targeted and been developed for the lunar area, previously targeted at Gateway, the space station that was to orbit the moon, which has now been paused to focus on getting onto the lunar surface, and then target the final design of those robotics at the uses on the lunar surface. There'll be a number of robotic needs on the lunar surface to be able to unload, manage cargo, do daily tasks. And so, we're looking at that at the moment. So as a company, we would expect to continue to be involved in robotics on the lunar surface. We have a very strong rover capability. MDA Space has had technology on rovers on Mars for the last 15 years. partners. We've been involved in the design of a new rover system with the European Space Agency and various teams for Mars called ExoMars, which is planned to go up in the future. And we're involved in a couple of different lunar rover programs to put rover systems onto Mars. And so for sure those items, and then we're involved in a range of other conversations where our technologies will be applicable.
Nate, I just wanted to ask one quick follow-up question. What's it like to try and adapt something that you had for going around the moon? Now you got to look at it for maybe being on the moon. How easy or difficult is it to do that?
A lot of things are the same, like the command and control and communication systems, figuring out how to have robotics control instead of 400 kilometers up at the International Space Station, now doing that 400,000 kilometers out at the moon. All of that is the same. Those robotic systems have been built for that and designed for that environment. In addition to dealing with things like lunar dust, for example. And so a lot of the characteristics are the same. The biggest change from going to a space station down to the surface would be the impacts of gravity, because now you have a gravitational field that's there. So you'd have to you'd probably change your joint strength, for example, in addition to maybe your segment lengths of your robotic system for different tasks and different purposes. So definitely an achievable adaptation for Canada to consider to be able to continue to contribute robotics to the lunar surface.
All right, Nate, we'll give you a last question.
Mike, you previously mentioned traveling beyond the moon, and I think a lot of our watchers would love to know, what does this mean for Mars and the likelihood of humans being on Mars in some time in our lifetime?
All of these activities on the lunar surface is definitely in preparation to be able to go further and to be able to live and work on Mars someday. So with the moon being a much closer planetary planet to work on, then that allows us to be able to work out all the issues around sustained rocket highways back and forth to the moon, to be able to move people and logistics back and forth to a habitat there, to be able to work through all the issues around habitats, living and working, food, everything I mentioned earlier. So the lunar program is important for the moon itself, but it's also important to sort out all of those issues so that we can go even further away to Mars in future years.
That was Mike Greenlee, CEO of MDA Space. Still ahead, we'll take one last look at the markets before we go. The Alberta Whiskey Act is a new bill that will provide a new definition for Alberta whiskey in an effort to grow the local distilling industry in Alberta. CTV's Tim Brooke has more in this report.
New parameters around Alberta whiskey will soon define exactly what makes this drink so sought after.
In simple terms, it means the product has to be made right here in Alberta from start to finish, using 100% Alberta water and primarily Alberta-grown grains.
The Alberta Whiskey Act is a new effort to grow the local distilling industry. Producers have been asking for clear labeling parameters for years as they try to differentiate their whiskey in a competitive market.
This starts putting the eyes on us, getting people to come to Alberta, in parallel with our tourism industry that is burgeoning right now and developing rapidly.
If Kentucky can bring in $9 billion annually, we are the breadbasket of Canada. We are the grain producers. We make wonderful whiskey here, and we have been for decades. So why not us too?
And the Alberta spirit isn't the only noteworthy part of this bill.
It's AI entering into the core machinery of government.
The province used artificial intelligence to help write the legislation. It won't say what percentage is AI, only that it helped with research and data entry, and that humans had the final say.
This legislation is structured, it's repeatable, it's pattern-based. AI is good at all that stuff. The challenge is designing the workflow around it.
Alberta's government predicts this likely is not the end of AI assistance.
We're not really anticipating a world where AI writes all of our legislation alone, but we certainly anticipate one where AI can be one of the tools that we use.
Expect the Alberta whiskey title to be handed out to eligible distillers later this year. Tim Brooke, CTV News, Calgary.
All right, before we go, let's take a quick look at the markets, see how they're unfolding. A lot of green again today. TSX Composite up by 0.87 after that big boost yesterday on Trump's comments that maybe there was an end in sight for the war in Iran. It's up 0.84. Materials up by 4.25 right now. The one I'm looking at, healthcare, up by 3%. They are leading the charge. There's a few in the red, and taking a hit is the energy index. Taking a look south of the border, the U.S. markets, similar situation. All green, green, green. S&P 500 up by more than a point. Dow by 0.82, and the NASDAQ by more than 1.5 points after that big jump yesterday. And that wraps up this edition of Trading Day. I'm Roger Peterson. Thank you very much for joining us. Have yourself a great afternoon.